What's going on, everybody? It's your boy Drew IQ. Welcome to another episode of Winners Win. Today, we're gonna be doing another, one of those kind of like stock news updates, and we're gonna be taking a look at specifically AT&T stock, ticker symbol T. And I'm actually really excited to talk about this with y'all because I have been owning AT&T stock since forever. Whenever I first got into investing, AT&T stock was one of the first companies that I bought because I started as a dividend investor, and I still have a large portfolio in dividend stocks, mainly because I think it's a very easy and good place for a lot of beginners because dividend stocks aren't as volatile. They don't move up and down as much, so they're not as risky. So I bought some AT&T stock and a lot of these other dividend aristocrats. If you don't know what a dividend aristocrat is, basically a dividend aristocrat is any company that has paid dividends for 25 plus years, and every year they have increased their dividend. So anyways, if you're a huge dividend guy like myself, you know all about AT&T stock. They are an amazing company. I still love them. But let's take a look at the news we have today because recently I have a couple different brokerages. I'm using Robinhood in this example because I know a lot of y'all millennials follow me, and this is probably what y'all got as well. If you own AT&T stock, you probably saw a specific message, something along the lines of, AT&T performed a spinoff. Shareholders received, 0.241917 shares of Warner Bros. Discovery, so WBD, for each share of T currently held. So essentially, if you held AT&T stock like myself, then you were also issued some shares of Warner Brothers. And that actually did happen. I do now all of a sudden have some WBD stock, which is amazing, honestly, because we're going to be getting into this further. But yeah, I just got some WB stock just because I owned AT&T. Not a bad deal, not a bad deal. And we're going to talk about why it's not a big deal. But first off, we're going to talk, a little bit, about, what happened, why, I'm getting this, Warner Brother or whatever, this Discovery stock, right? So what happened was essentially there was a merger, right? And this specific, Yahoo Finance example, they're talking about a mega merger by AT&T and Warner Media Discovery. Okay, so what happened was AT&T also owned Warner Media, and Discovery was a completely separate entertainment company, but they are both powerhouses when it comes to this, right? So if you look at this discussion, they talk about the merger. Discovery and Warner Media officially closed their deal Friday, combining their operations into one entertainment giant. So yeah, it's pretty amazing to think about. If you're an AT&T shareholder like myself, this is pretty big news. We haven't had a lot of like crazy groundbreaking news in a long time. A lot of it's been about are we getting a dividend this quarter still? During the pandemic, and yes, we did. Everybody, as an AT&T shareholder, we got paid dividends throughout the entire pandemic. So shout out to my dividend aristocrat holders. We were killing it. But let's go a little bit into this more. So anyways, let's go into right here, Warner Brothers Discovery. Let's talk about the stock and how it went up. Yeah, anyways, this or that. So none of this I'm really concerned with. I want to get into something more interesting. Now, if we go into over here, I'm really into Seeking Alpha because they have some really good statistics, right? But if you're just looking at AT&T, it's talking about as AT&T drops as Warner Brothers Discovery starts trading, but analysts are positive post spin, right? So post the spinoff, a lot of analysts, including myself, I consider myself an analyst. This isn't financial advice, but I look at stocks all the time, and I think this is a really, really good thing for a lot of AT&T shareholders. And I will also be now investing into Warner Media Discovery as well, because our Warner Brothers Discovery, because I think they have a great company. They are actually making more revenue than AT&T, and we will be getting into that later. But this is basically just talking about all the buy ratings of AT&T and all these other things. Let's take a look at AT&T stock, right? Just so you'll have an idea. right? So if you look at Warner Brothers Discovery is at about $24. So not bad, right? Looks like they had a spike. We're gonna get more into detail about that in a second, but let's talk about AT&T stock, right? So if you look at AT&T stock, without getting into like the tickers, we can look at the graphs later. They are the lowest they've been in 5 years, guys. They are the lowest they've been in 5 years, which is crazy. And this is partly, the pandemic, and I think a lot of things have, specific responsibilities for causing this. But at the same time, what we're going to look at is what AT&T has actually been doing and what's going on here, because what's really concerning as an AT&T shareholder is their dividend is about to be cut by half, which is really big, because if you own AT&T, you're owning it because the dividend. You're not getting it for the capital gain or the appreciation, because the AT&T stock, if you see here, hasn't gone up or down that much. It's been about 38 at the highest, around 30, back down to $20 forever. And if you go back like even 10, 20 years ago, it's just gone up and down between $10 to $30. And that's why it's more of a dividend stock. So that's why this part is very important. If you're an AT&T holder, you want to know about the dividends. They're going to be cutting their dividend nearly in half, which is very concerning for me. But if you know, as an AT&T shareholder, they pay a really high dividend. So I can honestly deal with it if we get some benefits here, right? But yeah, we're going to receive some Warner Brothers Discovery. So I received a lot of Warner Brothers Discovery stock. And I was really curious, like, is this going to be a good thing? Is this going to be a bad thing? I don't know what to expect, right? So let's just, like, I'm a real numbers guy. I like to get right to the numbers. I like to, like, just kind of, like, look over the news a little bit, see what people are talking about. But now that we know that there's going to be a merger between, Warner Brothers, which is owned by AT&T, and if you're a shareholder by me, this is going to really, really concern you, because now we have, all this stock for this other company, and we have no idea what's going on with this other company, right? Now, so if we just take a look right now at AT&T, their current stock price is $19. Like we said, it's really low. What I want to focus on here, though, is they are still a profitable company with solid profit margins. Not the best. I'd love to see at least 60% profit margins, but that's really rare. Even, 20, 40% profit margins I would like to see. But what's really important to focus on here is they're making money. They're making money, all right? They're making money, and they're doing well. Now, what's going on is over the last quarter, the revenue gone maybe down a little bit here, 10% over the quarter. Not crazy, because they're still making 168 billion in revenue. Okay, so you can't really complain about how much they're making, even if it is a little down right now. I think a lot of people are down during the pandemic. They're not the only people struggling right now. But this being said, AT&T is kind of struggling, right? The revenue growth is down just shortly over the quarter, but the gross profit, they're making money. They've made 89 billion, and they're doing great in my opinion. They're still making a lot of revenue. That is an amazing amount of revenue. Just so you have any idea, GameStop, which has been trading at high numbers because the apes, right, is trading at maybe, I think they make maybe 8 to 7 billion in revenue, sorry. So this company is making way more money than GameStop, right? AT&T is a powerhouse company. I love investing in them. But also, if you look at their revenue, right? This is AT&T's revenue. Their revenue has been fairly solid, right? So 2018 we had 170 billion. 2019 we had 181. 220, 171. So we kind of declined from 219 to 220, and then 221 we declined a little more to 168 billion. The thing is, yeah, we kind of went down a little bit in revenue, but besides the fact we have solid profit margins, we have a profitable company here, and this is a lot of revenue, guys. This is a lot of money. All right, and that's what I really want to focus on here is AT&T is making a lot of revenue. They have solid profit margins, and despite them being $19, I think this is a discount, and this is a very solid opportunity to buy this stock at a very reasonable price. Now, what I do want to look at now is what we just merged with, right? So we just merged, and now we got Warner Brothers Discovery, right? What is Warner Brothers Discovery? They're trading at $24, and we looked at Warner Brothers Discovery a little bit earlier, right? If we go back to Warner Brothers Discovery here, we can take a look and see They're at $24 over the last 5 years. They've stayed around, 26, 24, 21. They had a spike over here March 2021. They almost went to 70, almost $77. Okay, so their stock has been at one point much higher than $24, which is the current stock price. Now, the first thing I like to look at, right, is we always like to look at is the profitability, because all I care about with companies is, are they making money? Now, the profit margins aren't as high. They are not as good as AT&T. AT&T, like we saw earlier, has 11% profit margins, so they aren't as high, but they are still making money, and they are still in a solid profit margin. It's not the best, not the worst, but they're still in a positive profit margin. Right now, we look at the revenue. They're making 12 billion in revenue. 12 billion in revenue, which is still an absurd amount of revenue. Okay, guys, that is a lot. But what I do like to see about this is they have positive revenue growth. So they've grown over 10% over the quarter. If you're like me, I like to invest in growth stocks with at least 10% annually revenue growth. So if they're making 10% quarterly, that is fantastic. And if we're merging with this company, this is nothing but good news for us, okay? Because like I said, over here we were what, negative, I think we were we're negative 10% over the quarter for revenue growth with AT&T, but Warner Brothers is positive 10%. So this is going to kind of even out our revenue growth, and it's going to, in my opinion, really impact our future and hopefully get us and a better revenue growth over the next couple years here. Now, if you look over here at Warner Brothers, their total revenue is maybe, what is this? Not nothing crazy, right? They had 10 in 2018, but what to focus on is they've been growing year over year in revenue, right? Boom, boom, 10 billion, 11 billion, 10 billion, 12, 12. So they're doing well, in my opinion. They kind of went down a little bit during 2020, but a lot of companies struggle. If you look at 2020, that was just a difficult year for almost anybody in the revenue sector, or just not revenue sector, just making revenue was very difficult in 2020 because of the pandemic and a lot of things that, I don't really like to factor in, right? Because you can't control a lot of those things. We like to focus on what we can control, right? So anyways, this is really going to help. Now, one thing I want to focus on is right now, AT&T, if you do a discounted cash flow analysis, which is what a lot of financial advisors use to, do value investing. And if you know about me, I am a value investor. I have a lot of meme stocks that I do for fun. I've day traded, I've done all that stuff, but I am true a value investor at heart. And what that means is I like to look at the value of every company. Right now, if you look at a discounted cash flow analysis module or method, if you use that method, you will see that AT&T is valued at a fair price of about $25. So if you can get AT&T for about $25 or less, it is an extremely reasonable price. Now, if you really want to get them at a good discount, it would be getting them at 15 or lower, but I don't know if they're going to get that low. I think $19 is absurdly cheap for AT&T stock, guys. If you want to buy some AT&T, I think it's going to be a great time, because right now, like I said, they're making revenue, they're doing great. They've just had a merger with another great company that is actually has way more revenue growth, right? Doing way better. So I think it's just going to increase their value over time. Now, if you look at WBD, Warner Brothers Discovery, now they're currently at $24.78, right? We looked at it earlier. Now, if you do a discounted cash flow analysis, they're going to be valued at about $40, guys. So if you can get this stock at $40 or less, it's a fair value. And they're at $24. So the discount right here, it says 38%. So that is a huge discount. If you really want to buy either one of these stocks, I highly recommend it. It is not at an extremely low price, but it is at a price where I think is an extremely good discount, guys. If you hold this stock for the next 2 to 5 years, either one, right, this merger is going to be a big deal, and you're going to be making a lot of money. You're going to be collecting dividends, which is what I like to do. I like to focus on making money, and I like to be getting dividends every quarter as well. So we're getting appreciating, but we're also getting that cash flow monthly, right? So, anyways, that is going to be pretty much it. Nothing crazy, right? We just talked about there's a merger between AT&T and Warner Brothers Discovery. They're becoming a powerhouse. Both of these companies are really huge, and I think with their revenue, I think combined and what their power can do, I think honestly the revenue growth is just going to continue to rise, and so is your stock price. The stock price is a steal right now. A lot of stocks are extremely cheap. But that being said, guys, that's going to be it for today. So please, like, subscribe, leave a comment below if you have any other stock that you want me to review and take a look at. Um, I really appreciate y'all stopping by and, viewing with me. It means a lot. But yeah, guys, that's it. Take care. I will see y'all later. Winners win, baby. Let's go.